Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Thursday, March 12th, 2020. I wanted to do this video and hopefully get it out to you guys before the close. Two reasons. I'm going to cut out after the close today. I had something scheduled for today. I had to postpone because of the markets and all the updates I needed to provide to you guys. Of course, a lot of trading opportunities here today. But let's get this out to you guys before the close. I did compose a post that just went out, so you have charts, levels to watch. So I'm going to wrap it up pretty quick. SPY I've struggled to find, and you shouldn't have to look too hard. I don't try to force charts. I want to say that now when I was about to say I've struggled to find a support level or anything on SPY. Now you can go out to the weekly chart, and I have trend lines here. That one's broken intra-week. It's a weekly candle, so there's always a possibility of a snapback rally and get up there and close a week above it. So, it certainly doesn't look good as of now, but again, one more day left in the week. Not too far off those 2018 lows, and of course, there's the old bear market targets I've had for a while down there. I just don't think we go straight there, but anything is possible. Let me just continue to reiterate that anything is possible, especially in this market. I'm going to show you what I'm watching, what concerns me. All right, so SPY, let's just real quick go to QQQ before I leave that. SPY, as I showed you, is below support, just about any, decent support I can find, whereas QQQ, which, again, it's not the broad market. SPY is more diversified. QQQ is only 100 companies, fewer sectors, no financial stocks, but it is the tech stocks that have been driving this economy and the stock market. So you have the heaviest weighting in Facebook, Amazon, Apple, all those good ones that everybody loves, and it's at support. It has been all day. So yeah, it doesn't mean it's going to hold. It could be a temporary pause, and we've certainly had what I define as a reaction, a consolidation there. We've hit the bottom of that level. Remember, it was the 61.8 fib retracement and price support right here. Runs down to about 180 or so, and so far that's the level that's kind of contained this pullback today. There's the 180 level right there, and so you can see on three different attempts here. This one was good for a 7% rally off the lows. You can see the pop-up box to the left. That's if I can grab that low right there. Close enough. I might have just missed the bottom, but yeah, almost 7% rally, and that's kind of what I showed you this morning on the initial tag. That's that big candle, by the way. That's where you see that big run up. So we pretty much did rally into resistance. We rallied back to that 50% fib, a little shy of those the gap right there, those recent lows, and that very well may be it for the snapback rally today. And that's kind of what I wanted to say. We got it. There's the initial reaction. Doesn't mean we can't get another one, but as I often say, price targets that are set on trades, that's why I list multiple targets. You're usually likely to get a reaction on the initial tag of each one, and some traders can recycle back in, play a bounce off the initial tag of support, and then once it breaks, that's no good. Now, this one on this chart, on this board, I have just a single line, and again, I've been showing you this one here, has that support down to about 180, but really pushing it if it goes much below that. And we're back down towards those lows right now as I do the videos. So that's it. Market dumps today. We're down about 8%. We already hit one breaker earlier when the S&P 500 hit 7% shortly after the close. So the next one doesn't come in until a 13% drop. As I told you in that post, I'm slightly leaning towards, but not, hard sold, but slightly leaning towards we do get another run up and another bounce up here, probably to that level again, and maybe even a little bit higher. Or here's the thing about it. We can just break down. That's how it works here. Support. Let me tell you what's giving me a little concern and a little pause since that earlier post that I made just before this video. LQD. Okay, so called this one right. Had initially up until today planned to just, like I said, tuck it away on the swing short and target the bottom of this trading range. I'm jumping over to a weekly chart, guys. I know I'm talking fast. I want to get it out to you. Remember, I when I went over this in videos, said this is that weekly multi-year trading range, and that's ultimately, and it still is, a swing target. We could even go down below that. It would not surprise me in the least. But now we've hit this support here. But what's happened today, so we are at support again. Earlier we were at the trend line. Now we hit that 115.72. It's a pretty good support level. And so let me say, quote unquote, I think we hold here. I think LQD bounces here. Remember, there's a crowded rush for the exits, and it's known exactly how that'll play out. So far, it's played out very impulsively, and on the official trade, we hit the second target. I decided to revise it to a third target here. I didn't make 1660 was the support, but when it was trading there, as soon as I could screenshot it and get out to you guys, we were trading at 117.27, or actually it ticked down to 117.26 when I screenshotted the chart. But that's good support. So again, this is where, even though we hit it once, we bounced. Not crazy that we're testing again, but we are on it, and if it holds in LQD rallies, we could see a concurrent rally in the stock market. Otherwise, this is the floodgates have opened. This is that the fears that some had and that I had, and we traded right, where you're going to see a massive downgrading of all those triple B bonds and the LQD, and so that could continue. It may not even abate. We may continue to waterfall sell off until we hit this next support. Who knows? Maybe even blow by there. So this is a concern. What I'm getting at now. The Fed injected $1.5 trillion into the credit markets to kind of shore things up today. I'm sure they see this like everybody else. I can't imagine that that's not been pointed out to them. The ticking time bomb that's finally been triggered in the corporate bond market. So the question is, $1.5 trillion is a lot of money. Does it make a difference? Does it shore up confidence? And ultimately, do the markets bounce because they're oversold and people come in here and there's always fire sales and some bargains, so maybe you get a bounce here. What I'm getting at is if this just keeps melting down, that's not going to be good for the stock market. It's going to break a lot of funds, break financial institutions, that have their hands dipped in the cookie jar, banks with trading desks, things like that that get caught off guard, unhedged. This is what they call a Six Sigma event. That's, it's the probability of this. To me, the probability is high in others. This is how it would happen when it happens. When you have a ticking time bomb, again, you get that catalyst. You don't just meander down on through there. This is what happens when trillions of dollars of debt are all sold at once, and there's no buyers, nobody on the other side of that trade. So I just want to say that it could, I think we bounce here. I think we bounce. I think the market bounces, just a tradable bounce in both the corporate bonds. And I'm not trading LQD. I don't care to do that. And QQQ, yeah, I'm taking a shot on the Qs here. If they take me out, so be it. But I'm leaning towards that bounce. Nothing I'm betting the farm on. That's why it's not an official trade. If I had the highest degree of confidence, it would be an official trade. I'm looking at a lot of things here, like Amazon. Here's one that at support that I think if the market bounces will probably outperform. Amazon, who should benefit from the coronavirus should be Amazon. People are staying at home now. I do almost all my shopping online because I work out of the home, out of the house. But there are a lot of people that stop by stores on the way home, do this, and now they're going to be running straight home or working from home now. So net. Just from, I think people think like this. Who are going to be the beneficiaries? Amazon at support. There it is. Positive divergence on the 60-minute chart as well. We're starting to burn through or coming close to it here. This PPO line could turn up. So there's a bounce trade op for you if you don't want to go with QQQ. And there's others out there. You can sniff them out. There's a trend line that you could target. There's a gap. All over the place here. But before I move away from everything else and wrap this video up, let me just tell you what I'm watching. What has the potential to determine whether the next big move is up or down. There's a cluster right here. Pretty tight trading range. We fell down, gap down today, and as I showed you on the 1-minute chart, we're bouncing below there. I'm leaning this way, but fully aware that if we break, the next floodgate opens, corporate bonds, let's just look at the stock market itself. Corporate bonds could rally and the stock market could go down, but again, it's not going to help to see more downside in LQD. And then that would be more downside in QQQ, and I've already laid out additional targets for you earlier. The next official, this is still an official trade. Make no mistakes about it. Don't confuse any short-term outlook or scenarios that I list with a longer-term outlook. So to me, it's just a matter of when's the next bounce come from at this point? Do we head on down here, continue on down? There's other potential targets if things get real ugly. That 2018 low from December, 160.31 is minor support there as well. And of course that next target, which is set just above the 169 support level. And if we run at those 2018 lows, you're talking about another 20% downside. And at the rate the market's moving, that can happen pretty quick. If it's going to happen, it's probably going to happen quick. So we'll probably either get a kickback rally before then, or just another break today's lows, tank of the futures again tonight. The news, like I said, almost couldn't get any worse. I'm sure it can. I'm sure the fundamental situation will. But today kind of felt like what I call, it's not a selling climax in the market. I can't say that yet. We don't have enough evidence, but it almost seems like a bad news climax, if you will, with everything, all the headlines today. So we'll see. And again, very aggressive stuff. Like I warned in the last excuse me, in the last post, if you take a QQQ or SPY or any ETF home, you're going to be subject to a big gap that's you're almost guaranteed, close to being guaranteed to have a big gap, 1, 2%, 3, even 5% for or against your position. So in that, what I'll leave with you is you need to decide and do the math. How much are you comfortable with putting in that if you want to, go home short or long, with a gap that can be that much or more. Today we gapped down, what was it, almost 7%. Circuit breakers hit, but then they were removed and we kept going down. Again, you just have to kind of, like I said, keep your position size smaller than usual on these kind of things. And I also want to say, although there is certainly the potential this market could fall a lot more before we get a decent rally, that is certainly there because things are breaking right now and they could get worse. But what I said earlier today in one of the posts is the risk reward is no longer very attractive. I thought the risk reward was great here when we shorted it. I thought it was great when we went long there. That's why those are official trades. Why I can certainly see the potential for more downside. I can also see the potential for a sharp snapback rally. That could be anywhere, I would say, we already had a 7% snapback rally intraday today, close to it. So the next one I could see 7 to 10%, and it could happen in the blink of an eye, a single day or 2 days. We have Friday coming up tomorrow. There's another consideration. Anything can happen over the weekend. So those are the considerations, and those are the levels to watch. Again, keep it super simple, maybe overly simplistic. You have these recent trading ranges right here. Market's been consolidating. Bulls and the bears are trying. It's a little standoff, if you will, Mexican standoff between the bulls and the bears. Who's going to blink? Which way do we go? It doesn't mean we can't just pop above and then tank, or have a false breakdown and then go up, but those are the levels that seem to be important right now, and the traders are probably going to step in and watch. So, if you were to short a breakdown below the range, then you'd want to stop somewhat above just inside the top of the range. And if you buy a breakout above the top of the range, then you want a stop somewhere down a little bit below the bottom of the range. Remember, you have to use wide stops to swing trade this market. And if you're a day trader, I probably don't even need to tell you what to do. You'd be really, digging down here in these 1-minute charts and, trading the rips and dips as you usually do. Okay, that's about it. There are many other things out there, and I will cover. I do have to run out here shortly, and I'll be back tonight, and we'll look at treasury bonds. We'll look at gold and palladium and just all that other good stuff that's out there. But so now let's just wrap it up here. We'll see how we close today, and of course how the futures do tonight. Any big moves in the futures, and as I've been doing lately, I'll come, even if it's 9-10 o'clock at night here, I'll make a point to post anything that looks compelling. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.